HR issues can kill you. One complaint against your company can turn your world upside down. And you spend way too much time dealing with HR when you should be spending your time on making a profit. You should talk to Bambi. With Bambi, get access to your own dedicated US-based HR manager starting at just $99 per month. They get to know you and your business while providing HR expertise and the personal touch you need and want. They're available by phone, email, and real-time chat, so onboarding and terminations run smoothly. Team members reach peak performance, and your business stays compliant with changing HR regulations. And with Bambi's HR Autopilot, you'll automate important HR practices like setting policies, training, and feedback. HR managers can easily cost $80,000 a year, but Bambi starts at $99 per month. Schedule your free conversation today to see how much Bambi can take off your plate. Go to Bambi.com right now and type in Accelerate under podcast when you sign up. It'll really help the show. Spelled BAM, BEE.com. Bambi.com. Type in Accelerate.
Me, but also you. The Pharaoh fast forwards his favorite foreign film, Powder Donut. Okay, what's my line?
The only line I see here on the script is get options based on your budget with the Name Your Price tool from Progressive.
Oh man, that's a tongue twister, huh? I'm sorry, I'm gonna need a few more minutes. Bulbous Walrus, the Bulbous Walrus.
The Name Your Price tool, only from Progressive.
The owl ran afoul of the comatose coxswain.
Progressive Casualty Insurance Company and affiliates. Price and coverage match limited by state law.
Welcome to Accelerate Your Business Growth with your host, Diane Helbig. Diane is a leading small business development and leadership coach, author, and speaker who is passionate about sharing valuable ideas, tips, and techniques with business professionals worldwide. Diane brings you the world's experts and gurus in all things business, whether it's sales, structure, social media, planning, or plateauing. Guests bring their expertise and energy to each episode. When growing your business is your focus, Accelerate Your Business Growth is the show to listen to. Got a topic or guest suggestion? Let Diane know. The goal is to make sure you have the information you need to move your business forward. Thanks for joining us. Settle in and enjoy.
Hi, everybody. Thank you so much for joining me. Today's podcast is sponsored by Audible.com. Audible.com is a leading provider of spoken audio entertainment and information. Listen to audiobooks whenever and wherever you want. Get a free book when you sign up for a 30-day free trial at audibletrial.com/businessgrowth. Accelerate Your Business Growth podcast continues to gain recognition as a great resource for business owners, professionals, and entrepreneurs, and that is really because of the guests who join me to share their expertise with all of you. And today we have such a guest. Today my guest is Mark Ritter. Mark is the CEO of MBFS and a specialist in credit unions and business lending. After building Members First Federal Credit Union's business lending programs into the top 10 in the nation in the number of loans and balances outstanding for federal credit unions, Mark took on the challenge of being the CEO of MBFS. Mark was the fifth CEO in 5 years for the organization, which lost money every month of its existence. In the past 6 years at MBFS, Mark has increased the number of credit unions, the Credit Union Service Organization services, by over 500%, grew the revenue by 800%, and ensured positive cash flow every full year he's been at the CUSO. Thanks so much for joining me today, Mark.
Thank you for having me. I appreciate the invitation.
I am thrilled to have you here. Business lending is always a big topic, something that I think the majority of listeners either are curious about or are in the, getting ready to do something about and don't necessarily have enough information. So I'd actually like to start with asking you what you think the biggest mistakes small businesses make when they're looking for financing.
Sure. I really think it comes down to two pieces that I see as most common. And the first is businesses having good communication back and forth in an open relationship with their lender or potential lenders. They need to ask questions and they need to listen, and they need to be able to talk through the potential lender what exactly their process is, that they understand how this institution works, as opposed to maybe some other ones. I see a lot of people who look at banks and credit unions that they're all same, they're all homogenous, but people work so much differently. It's almost like a restaurant. You don't go to every restaurant having the same expectations. There's really quick, cheap, and easy. There's high end, and there's everything in between. At the end of the day, they all fill you up, but they're very different institutions, and you need to find somebody who culturally goals and what you want to accomplish.
That's so great. I love that. That makes so much sense to me. They're like restaurants. I really like that analogy. So, and this sounds to me like what you're saying is even credit union to credit union or bank to bank, they can be very different institutions. Is that fair?
Oh, certainly. People have different credit cultures. The credit union industry as itself has some, I'll call it some homogenous values, but some credit unions are set up in low income areas to help out some underserved markets where people that they don't have access to institutions. Some credit unions are very large. They focus on real estate. Some focus on SBA loans and more operating businesses. But in the credit union space, we work together across institutions a little bit more than the traditional commercial banks.
Oh, that's interesting. I talk a little what it takes to actually get a business or real estate investment loan. Sure. So what are the keys to being able to really secure a loan?
Sure. The main factor that I talk about is understanding your business and numbers so that we can make the process easier. And when I say understanding your business, I mean relative to others and your industry. And because credit unions today really want to lend money to banks or with the businesses, so we try to make it work. And that involves having the tough conversations with your potential credit union partner and really talking through the challenges at your loan. At the end of the day, we have to show with a reasonable certainty that you have the ability to pay us back in the future. And many times with a small business, the numbers only show so much. We want to understand what your numbers mean and that you'll be able to pay us back in the future so we can make more loans to more businesses in the community. So it really comes into being prepared and understanding your business. And if there's challenges to your loan, we're probably eventually going to find that out eventually, and it will be much, much better to the process if you bring those up to us and talk through those conversations so that we can develop a solution that works for everybody.
Okay. So that sounds to me like the business owner should, well, first they have to understand their own numbers, their own cycles, their own customer base and prospects and whatever it is they're hoping to achieve, they also have to be able to articulate that. Is it over like a couple of years? Like, do they have to be able to say for the past so many years, this is what has been going on in their business and this is what has been going on in the marketplace for their industry?
So a credit union, for the most parts, relative to a commercial bank, is a community-based financial institution.
Okay.
So we have a lot, we have to look at the numbers, and the numbers have to make sense. We're still a regulated financial institution, but we'll take in much greater factor all of those qualitative pieces about you and your business. Do you understand your marketplace, who you are, what's your experience? Do you have a relationship with other credit unions that you've shown yourself to be a credit-worthy individual? So we can look at the picture in totality. Maybe last year was a rough year, but if we understand that you're investing in some money in your business, or you shut down a line of business that maybe doesn't make sense anymore, and we can look at the future, that really helps us out into painting a picture and getting your business the money that you need so you can grow your business.
I see. So am I understanding you right that part of it is, for example, I have car loans with my credit union as a person.
Yep.
So like that gets taken into consideration, relationships like that?
Oh, absolutely. One of the key differences with any credit union go to is it is a cooperative financial institution. When you look at it, there's it has the same products and services and car loans and checking accounts and mortgages that you may see at your commercial bank. But over 100 million people belong to credit unions in America today. So quite a large portion of them own businesses. So we look at it as, are you a good member of the cooperative, and we want to help you grow to be successful financially, versus you're going to somewhere where there's a shareholder and we're trying to do something that benefits the shareholders versus the membership and you as a person and a small business owner. So we love relationship businesses. And if I went to a commercial bank, they'd probably fire me within a week because we have a much more casual approach to life. We want to talk and get to know people. The relationship counts. The relationship matters. That's why I really enjoy being part of the credit union industry. It's nice that people aren't protesting in the streets against their local credit unions for the most part.
That's a really good point. It is absolutely. I mean, it is so different. In today's marketplace, I mean, things have just been so volatile, I will say, between what goes on with interest rates and what goes on with the stock market and all of that. What is the landscape today for a small business owner being able to get a business or real estate loan?
Well, you hit one of the key points in today's world, and the theme of this year that everybody missed is interest rates. Interest rates have plummeted over the last few months, and you've seen that and that is really carried over to the small business community. If you're a business owner and received financing within the last 2 years, absolutely look at talking to your local institution and asking about lower interest rates and negotiating something down. As a federal credit union, we don't charge any prepayment penalties. So we tend to make it more, we want to get you the best deal that makes sense now. But the liquidity in our industry is very strong. It's a great time to go get a loan. Credit unions lend deposits that are in the institution as an industry, we don't really do a lot of borrowing and hedge fund, and we're not dealing with Wall Street. We're really lending off the local deposits in there from the community. And the economy, when we look at businesses, we're not seeing a big downturn. We're seeing things as very stable. There's a couple pockets, particularly maybe agricultural industry, that has seen a little bit of an uptake in delinquency. But for the most part, things are pretty solid, and the regulatory environment is wonderful today. When I first got into credit unions, it was very tight and restricted about what we can do. But today, credit unions have an extraordinary ability to reach out to, whether you're a real estate investor, whether you're a business owner, whether you're a local community organization, to really get you that financing you need.
Okay, so is it easier for a company that has a product that they make as opposed to a service business, or is it really based on your history, your relationship with the community, and your credit worthiness?
Well, much like any business lending, particularly in the small business lending, if you have something more tangible, that's sometimes a little bit easier to lend off of, where that's the security. But we also have the ability to work with more of that service-oriented businesses. Sometimes if we're getting into a service-oriented business, and I think of a dentist. If you're a local dentist buying another practice, you're buying some tables and chairs and lights that stick in your face, where maybe there we'll go with an SBA loan versus somebody who's buying a fleet of trucks, where it's sometimes easier to finance those trucks. So there's a lot of products and services out there, depending on the type and nature of your business.
Okay, so thank you for that. And can you explain the difference between an SBA loan and a like collateralized loan, I guess is?
Sure.
Okay.
Sure. And I'll start with the SBA loan and what exactly that means. And you've probably heard this in many of your listeners, where they've heard somebody say, I've received an SBA loan. And what that typically means is they received a loan from their local credit union or bank where a portion of that is guaranteed by the government. And what that is for is to allow a credit union to expand our credit box to provide financing to somebody in the community where under traditional terms we might not have been able to do it. And I can think of a good example is maybe you're buying a new location in a strip mall where it's going to cost several $100,000s to build out your business in the strip mall. Well, as a lender, somebody else owns that strip mall, and once you build it out, that's not really part of the real estate, but it's needed for your business. As a lender, I can issue a loan to that is guaranteed by the government, because I think you can pay me back and it's good to open this business, but it reduces my risk. And we'll see that. And maybe if you're buying a business or you're expanding a lot and need that working capital financing, and franchises are very commonly used for SBA loans. And that really helps us where we like you and you like us, and we can offer you better terms and better conditions for the loan and additional funds where we may not be able to do it traditionally, and it expands that credit box, and it's actually at a very reasonable interest rate.
Interesting. Okay. So it sounds like, I feel like what I'm going through in my head is things I never knew before, which were why even considering a credit union for a business loan in the first place. Like, I can hear reasons why it seems like it can be a better fit. Are there other reasons that a business should consider a credit union over a bank?
Sure. It really comes down to your goals. It comes down to your goals and to who you would like to see. And there's people who like that community-based institution.
Yeah.
Where you can go in and talk to somebody and have access to the decision makers at the institution directly and form those relationships, so that the people who want that experience, a credit union is a good fit for you. It used to be there was First National Bank of whatever town on every main street in America. Those days are rapidly declining.
Yeah, but this really sounds like that. See, this is what's so interesting for me. As you're talking about it, I'm thinking, this sounds like the old days where the local businessman would go into the bank and talk to the bank guy, and the bank guy, they knew each other. They went to church together or whatever, on a bowling league together, whatever it is. And so they knew each other, and it was more of a trusted sort of relationship than transactional.
That's exactly right. Our challenge is there's not too many people that I talk to where they say, wow, that's a horrible idea. I don't know why I'd ever want a situation like that. My challenge is many people don't think of that as an option, even though, like I said, there's a third of America belongs to a credit union and generally have a pretty good affinity and feeling about that relationship, but they don't reach out to that for their business. And some of that's historical. It was really only back in 1998 that Congress changed the Federal Credit Union Act that allowed this in a much larger basis and a larger scale where we had the permission to do it. And when I first got into credit unions in 2001. And to give you an idea, just on my home state of Pennsylvania, when I first got into credit unions, in the entire state, there was $12 million among every credit union business loan if you added them all up together. And most of those were Amish loans. Today, there's over $3.5 billion of commercial loans among credit unions in Pennsylvania. And there's over 70 billion in the entire country for credit unions business loans. So it's really rapidly expanding, and there's a lot more credit unions offering this. It used to be, when I first started, it was the one-off unusual item. I was a novelty. Now it's really becoming where the vast majority of credit unions offer solutions to small businesses in their community.
Yeah, it is. I mean, that's why this is so interesting for me, because I don't think people realize this, and they need to know about it, because I think they think that credit unions and banks are the same, or if they know they're different, they don't even think about their business. As you said, they don't even consider their business when it comes to their credit union. Sort of weird.
Exactly. And much like credit unions are a cooperative institution for the members, as I mentioned, we tend to be a cooperative industry. My company, MBFS, we are actually owned by 10 different credit unions and work with over 60 credit unions in the country. So people, and what we do is we provide basically the nuts and bolts and sales and everything to allow credit unions to offer loans to their members. And think about it this way: instead of every credit union going out and buying a loan system and hiring underwriters and hiring salespeople and everything you have to do to offer this, we've essentially gotten together and built it all on the back end, so that we can all do it much more effectively to each other. And when people work with us, what happens is we really match them up with their credit union that makes sense for them if they don't have their local institution to work with. If they just say, I like this concept, but I'm not sure who to go to, we really just process it on behalf of a credit union to get you the financing you need. And many credit unions they're kind of those mid-sized community-based institutions. We also then partner lenders together so they can fund the loans collectively and grow and expand to with your business.
Wow, that's really innovative. I think that's great. It makes it so much better. And this is nationwide?
So there's actually about 20 companies like MBFS in the country, and maybe each of us work with 50 to 75 credit unions. And there's also credit unions that work individually. So if somebody it's very common for somebody to contact me and say, I'm in Oregon, where I might not have credit unions on a local basis, but we have a network of people like myself where we hook you up and match you up with a local credit union who does offer business loans and business services to their membership.
Got it. This is so interesting. I have to take a quick sponsor break, and then I have some more questions for you. Accelerate Your Business Growth podcast is happy to be sponsored by Audible.com. Audible.com is a leading provider of spoken digital audio entertainment and information. They have over 150,000 titles to choose from, and you can listen to them on any device, including whatever you're hearing us on right now. And if you sign up at our link, which is audibletrial.com/businessgrowth, you get one free audiobook and a 1-month trial of the service. Some examples of books you can listen to on Audible.com are Do Business Better by Damian Mason and Breathe to Succeed by Sandy Abrams. So visit audibletrial.com/businessgrowth, explore the books that are of interest to you, and receive one free audiobook when you sign up for the trial. Today we're speaking with Mark Ritter about business lending and credit unions. Okay, so you mentioned something about this before, and I want to circle back to it and get some more clarity on it. How does a small business owner negotiate rates and terms with their commercial lender?
Sure. And that's the great part about the business side. We're not regulated like the mortgage industry. And what it really comes down to is talking through a fit to match your business cash flow with the credit needs of the operations. And that's what we try to do, is really match up your cash flow to make sure you're getting the product that you need. For example, a lot of people say they want a line of credit, but what they're going to go buy a piece of equipment, and what they need is a loan. That's not a proper use of a line of credit. And we, in our credit union business, we tend to not see that back and forth hard line negotiation as much because of the nature of our industry. You have to remember, credit unions are a not-for-profit cooperative financial institution versus large regional bank, which has some different values in how they're issuing services. So credit unions as a whole tend to have a little bit lower fee structure. We tend to be managed and monitored to keep things fair, but pretty even for the both of us. If we have excess profits, many credit unions return those back in dividends to their members, or we work to keep rates low. So when I talked about having that open communication with your lender and your credit union, that's where we want to talk through the goals on what you're looking to achieve and how we can help you do that. And that's also one of the reasons why credit unions can't charge a prepayment penalty, because we want that openness to make sure that you have the best programs as the interest rate market changes. And you're not locked in and penalized for just bad timing and bad luck.
Yeah, right. Yeah, that was always a weird thing to me. I never quite got that. I mean, I sort of get it that the institution doesn't make as much money if you pay it off early. Is that right?
Exactly. And many times in a commercial bank, they're borrowing those funds and leveraging the deposits on hand. So you have to also think about, when you get a loan, ask about who's actually funding this and where do you get your money from? Because if you're borrowing the money from a third party and they're lending it to a business, well, they're locked into an interest rate. So they have to make that spread. If you're with an institution like a credit union that's lending out money based off of deposits, well, as you know, as rates move up and rates move down, so do deposits. So that becomes much more malleable in terms of, it's not as fixed and rigid when you're negotiating and talking to your local credit union as you could a local community bank.
I see. This is fascinating. So, if a business owner gets a loan and at a certain interest rate, and then the interest rates go down, are you saying that then they could renegotiate that if they got their loan through a credit union?
Exactly. And in our world, it's not automatic, but we permit a prepayment at any time in the loan. We're not locked into that. You can walk in, pay it off, and be done with it. So the credit union has the incentive to keep it at a continual good deal, and always make it that win-win for both people together, as opposed to just saying, too bad, you got a rates went down, things go on. Because what happens if we have that attitude is the loan walks out the door, and it's not good for our business either. Right. We would much rather keep a good relationship than hold on to terms and conditions just because interest rates changed, and it's not favorable to the business.
Yeah, that's huge, and feels like is a huge part of the difference.
Yeah, as I mentioned, it's usually once we can get through people talking to us, it's not a hard sell.
Yeah, it's just getting them to think about it, right? Because they're not. Yeah, I get it. So you joined this company. It sounds to me like when you joined this company, it was not doing terribly well, and you have been able to turn it around. And so I'm wondering if you would share with the listeners how that happened, because there's value in how do you turn around a failing business in the event anyone is currently struggling.
Sure. Our company was formed back in 2008, and I came at 2008, and I came in at the end of 2012. And it wasn't so much the economy that impacted us as it did the right hire and fit and service level. And previous to me, the management of the company looked at our credit union partners as almost an adversary instead of doing and support and structure and being consultative. And we didn't spend time setting up things right correctly when it came to systems. And most of it came down to service culture. And shortly after I got here, and I was, by myself at the time, my family was still in central Pennsylvania, and I was sulking on how we can do this. I sat down and I said, think about going to Chick-fil-A, and you never have a bad experience at Chick-fil-A.
Right.
Let's focus on service. Let's focus on success, and just fix one thing every day. we don't have to change it dramatically overnight. And let's just take one piece and fix it and make it a little bit better every day. The other thing is we had some toxic employees. These were people who were bullies, and they permeated that culture. Some of them changed, some of them didn't, and we had to work those people out of the system. So it really came down to me for service level, accuracy of your work, and also the right people on the bus. And as the CEO of the company, as we've grown every year, I've had to remove myself more from the operations, and I can let people, and sometimes that it kills me that I let people go and do. But we've also, I say, I just need to give people a chance to succeed. And I also need to give people a chance to fail and figure it out on their own. So
yeah. Is that a hard thing? I mean, it sounds like that's a really hard decision to make, that it's vulnerable.
And I've learned that it's very much a different mindset depending on when you're in fixing mode versus building success. When I was in the fixing mode and building, absolutely, I was in the weeds. I was figuring it out. There was a reason where we were at, and I had a much lower threshold for letting people fail because we've already done that. Let's figure out success, put the systems and peoples in place, and let them go and get out of their way. We didn't have dumb people. We didn't have people who didn't know what they were doing. We had people who didn't understand the big picture and getting things going. So it really kind of became that cultural issue. And then every year I've made more and more steps to get away from the operations, where now I can go on vacation and not sweat as much, and really allow the system to work. And I focus on building those systems and with great people, and also having better client relations as well. It was a lot of listening those first 2 years and just talking. I found that our clients knew the pain points much better than our staff because they lived it every day. And it was a lot of fixing and building what the clients were asking for instead of the staff, because I think if they had the solutions, they would have just done it right away. There wasn't, we really didn't have bad intentioned people, but we had people who maybe didn't understand our clients.
Right. That is so great. And what a valuable piece of information for everybody listening, because part of what I'm hearing is not just about turning around a failing business, but some principles around growing a successful business, listening, getting out of the way, empowering people to be successful, and mindset. Those are critical to creating an environment where people are empowered to succeed, and it gets rid of the toxic people, the bad elements, the negative atmosphere.
A lot of times when we look at a business, we always say, are these people self-employed or do they have a business? Because they're two very different things. And if they're self-employed, sometimes that's almost a little tougher to lend to, because if they get sick, if they go on vacation, if something's there, there's no business.
Yeah.
When we have a business, if the owner steps away or there's a disruption or something happens, is the business still going? And we went through the same metamorphosis here into building a business that's reliant on somebody versus I can go away now and the system works. And we see the same thing with our businesses that we work with.
Yeah, that makes a lot of sense to me. I say to my clients a lot of time, because everything's in their head, and a lot of them are really afraid to let go of things. And I say to them, okay, I sort of get it, and if God forbid a million times you got hit by a bus and you weren't dead, but you were in the hospital, and let's say you were in a coma, what would happen to your business? What systems do you have in place to make sure that people can just pick up whatever it was you were working on? It doesn't even have to be the owner. It could be the owner. It could be the managers. It could be really anybody, any one person having a hold on information that is critical to the running of the business. You have to have that information somewhere so that anybody can step in and keep the company going.
Yeah, and in the lending world, that's actually a key component for what we'll look at. We want to know if something happens to you, what's the next step? And sometimes, I hate to say, sometimes it's better to die than to get sick or be incapacitated. But it is financially, because usually you have life insurance and people get money and they go on with their life. A debilitating illness can really impact you. And we want to know that succession plan to help not only the credit union as a lender, but your business is well managed and taken care of. So should anything happen to the owner?
Right. You got to think about these things. That's really valuable, and it makes perfect sense to me that that's one of the things that you would look at when it comes to lending to a business. So if someone's listening and they're thinking about expanding, or they're thinking about buying a building, or they're thinking that they need to explore getting a loan, what is the first thing you would tell them they need to do?
The first piece is very much to sit down and look at, first of all, I as crazy as it sounds, I'm somebody who is debt averse, and to say, how does this financing package or potential financing package make you more money and reach your goals of where you want to be as an institution? As if it doesn't help your business, if it doesn't make you money, if it's not going to help grow your business, don't do it. You have that answer more than anybody else. And if you're going to expand, what's the cost of that expansion? What's the break-even point? And what's the potential return? Just because you hire 3 new salespeople and buy 3 new vehicles doesn't mean you're going to have that exponential business to go along with it. So really, and then from there, get that second opinion from your accountant, maybe your insurance agent. And then before you apply for a loan, and maybe even before you have a need, establish that relationship with somebody like myself or the local lender in your bank or credit union who can talk with you, and you can call them and know the answers to what have the answers to before they ask the question. So, and that's where it really comes into that. Getting a loan and getting financing is like decorating a cake. That's the last thing you do is write happy birthday on top of the cake. That's the loan part. You have to make the cake first. You have to plan for the cake. You have to build the cake. That's the key component into building that foundation for success of your business. I always look at...
I love these analogies. Sorry, I love them. They're so great. Go ahead.
So yeah, that's really where I see in terms of how can we help businesses succeed. There's nothing worse for me and for a financial institution where to lending money to people who it doesn't benefit their business, because ultimately you figure that out and you don't want to pay, and it causes resentment. So we really want to help your business succeed and grow. And that's how we grow and are successful as a cooperative financial institution.
Yeah, I think one of the biggest things I'm taking away from this is the cooperative aspect of it, that it is a partnership. It isn't, it's not as transactional. It's not, there's someone in the power seat and there's someone else who needs it, and so, jumping through all these hoops and whatnot. I mean, there's things you have to do. There's information you have to gather, and there's, you have to be in a certain situation. But this cooperative, if you're successful, we're successful, let's work together to make sure this makes sense, that you should be doing this, and get you the right system. Because, before when you were saying you might not need a line of credit, you might need a loan, most people don't know the difference between those two things and what they should be doing in any given situation.
Exactly. You're spot on. And that's where, when I talked about earlier about choosing the right financial institution, that's a cultural fit for you. Who are you? What are your values? And sometimes you don't hear or think about financial institutions as having values, but lining up with somebody who meets that. When you strip away a credit union, it's run by the board of directors. Well, the board of directors is elected democratically by the membership of people who have the accounts there. They do that annually. So that's where it becomes that ultimate check and balance for us to make sure as a lender, we're doing the right things for the people who have accounts there for their benefit.
Yeah, it's just such a different sensibility, a different mindset about it all. It's really great. I never would have considered this. I thank you so much for coming on and sharing the information and giving us this education. I look at it totally differently now. It's really tremendously valuable. Will you let the listeners know, how they can find you, or what you think they need to know in order to be able to connect with you if they need or want to, please?
Sure. If you're a business looking for financing and you'd love to connect with your local credit union, give them a call first. If you're not sure of next steps, you can reach us on our website at mbfs.org. I'm also active on LinkedIn, and we have a company profile on LinkedIn, Member Business Financial Services, that you could reach out to us. But the easiest way is our website, mbfs.org.
Terrific. Thank you so much. And listeners, thank you for tuning in. This was some really incredibly valuable information that you have just gotten. I would also like to thank our sponsor. To get a free trial of audible.com as well as a free audiobook, just go to audibletrial.com/businessgrowth to sign up. As always, continue to prosper and be curious. And until we meet again on another episode of Accelerate Your Business Growth, goodbye and good day.
Hey podcast listeners, my name is Paul O'Connor and I'm the host of the Rust Belt Rundown, a show that highlights valuable insights from manufacturing executives and business leaders in Northeast Ohio and beyond. We convene these leaders for candid discussions about business, regional happenings, industry trends, entrepreneurship, and more. With a wide range of guests and topics, there is something for everyone. Listen to Rust Belt Rundown for free on Spotify, Apple, or your favorite podcast app.